Yo, Chad, what's up, guys?
Yo, yo,
Hey guys.
Chad Cow. How you guys doing?
It's like a weird vibe because it's like it's Thursday, but we're doing these spaces now. I kind of liked it that it was like, all right, it's the end of the week.
I'm tired. I was dumb enough where I had like a meeting. I'm living in like Asia right now, but all the meetings are still in like Western time, and so I had like a meeting at like 1 a.m. my time. And I'm like, you know what? I'm gonna push through it and just get up for. And I'm not even gonna sleep. I'm just gonna do the spaces, and it wasn't the smart move. It was not.
Dang. So you're on basically like an all-nighter?
All THORChain nighter, yeah.
Wow, the devotion.
Yeah, that's pretty. You should have just went to sleep, dude. I don't know what you're doing.
Well, I got done with that meeting at 1 at like it was like 2 or something, and like I have a couple more things I
Yeah,
gotta take care of real quick, and then it was like 3:30, and I'm just like, you know what? It's already 3:30. It's only a couple hours. Might as well just push through.
yeah. What
One
can
thing
you
led
do
to
in
another.
Japan at 3 in the morning? Is anything open?
Write code for THORChain. That's what you can do.
Yeah, fair.
Well,
No, they actually.
that makes it even
Go
more
ahead. Go ahead,
special.
Terrell.
You're so devoted that you're here to give the updates on no sleep.
Yeah, so I mean, there's been a couple like pretty big things. I mean, first being Ledger Live with THORswap, which has been like a really long time in the making. It's cool to see it finally go live. I know that THORswap team's been working on Ledger Live for a hot minute, and like finally pushed it through. You could make cross chain swaps on Ledger, and it's been like the result of a ton of work that went into this and a ton of things behind the scenes, like including having Ledger have to like redo certain like parameters and things that you can send to just like make it even possible. Like this was not possible like 6 months ago or anything like that. And yeah, it's cool to see it like finally there. And I mean, obviously in like its early form, but I think we'll continue to see it evolve, just like a lot of the other really big integrations. The big teams always tend to start small and then kind of build up and move slowly and just build out the feature set. So
Yeah, it's amazing to see, and yeah, this is just the first step, getting the foot in the door. That integration should be getting even better over time, but yeah, people can go play with it right within Ledger Live under Discover and find THORswap. It's relatively limited right now, just as far as what chains you can swap from. I think just BTC and Atom at the moment. So that's why on the THORswap side, we're kind of waiting to do like a big marketing push until it's a bit more fleshed out. But yeah, it's awesome to see like this first iteration in there, and then that is going to get more expanded into supporting hopefully all the chains, and then hopefully this is just foot in the door to get it just as part of the swap feature in the future. I mean, that's like, nothing, no announcements on that front, but that's obviously the goal that everyone's pushing for. So having it under Discover is a really good start.
Yeah, hoping that once we have streaming swaps and we can do much larger trades at a low slip fee, that like it getting integrated into the swaps part of Ledger would be hopefully easier, just because we become like the best price execution, like bar none at that point, right? So maybe at that point it'd be easier to slip in there.
Yeah, what's interesting about the way Ledger does it is it's similar to Edge Wallet, where they actually separate out the providers by centralized and decentralized. So if you go and like you swap Bitcoin to ETH, it'll show you a bunch of providers like uh, I don't know, name just pick your service provider for cross chain swaps. That's a centralized company, and maybe it's on there, maybe not. But it gives you a bunch of quotes from different routes, and then decentralized is like there is no option to because there's nobody obviously besides us. So it's like now the integration is like in, and it's in its like early form. Then we can work to be the decentralized route that's there in like the actual app itself, which probably drives a lot more volume than like being in a Discover tab where you have to actually go to the you have to go in the Discover section and then say like, oh, THORswap, like what's that, and then like check it out. Obviously that's really good for like just THORchain's like recognition and just kind of like status slash like perceivability in the space, just by being like kind of front and center there. But once it gets into the actual like swap section, then that's where we need to be, obviously. And yeah, with streaming swaps, then that just means we'll probably just beat out all the centralized routes too. So then we just get it all. But yeah, we're pretty close on like actually being able to deliver like the full featured integration. So it's like it's just an iterative process. Like you got to start somewhere and then work your way up. You can't just like teams like this just don't work like that. With just being able to ship everything just all at once. And there's just a lot more work that's required on their end, like to even put in like Ethereum, for example, as a swappable asset. So we're gonna get there.
I wonder like that the amount that the swap tab on Ledger Live must get like huge amounts of volume, right? I can only assume. It's like a logical assumption to make.
You think it's more than
And
Trust
like
Wallet or less?
more, I would guess. I would bet more, but I obviously don't know. I'm just kind of like pulling out of the crack of my ass. But I can only imagine that gets a lot of volume, and if we can get integrated in that thing and all the different like swap pairs and stuff, and we have better price execution than everybody else in that centralized list, like that'd be fucking awesome.
Yeah, I need to do some comparisons and see like how good their quotes actually are. Because when I compare most services, like unless you're talking about like going on like Coinbase Pro or something like that, like where you're going to get like probably best execution like anywhere. When you're talking about just like all the other routes where there's dozens, hundreds of them, our liquidity beats out on the most important routes like Bitcoin to ETH, like almost all relevant swap sizes, like basically anywhere from like $300 to $500 to like a couple thousand, which is really like the sweet spot of liquidity fees, but also not like getting wrecked on slippage. So
No, I think we'll actually beat Coinbase. Maybe not Coinbase Pro. I'm not really sure what their like fee model is off the top of my head. And we can look it up later, but like I'm pretty sure we'll probably beat everybody, including Coinbase Pro, most likely. Maybe
yeah,
not
with streaming
OTC
swaps.
dealers.
I'm saying without streaming swaps, we're
Without
already there
definitely not.
without streaming swaps. Yeah.
Yeah, gotcha.
And you guys shift something else today at THORswap, right? I saw another
Yeah,
announcement.
yeah. Just shipping. The other thing is Trezor integration. So just you can use Trezor on THORswap. I believe it's THORChain starting out. So that's pretty cool for all the Trezor users. Now you don't have to move out to a different wallet or whatever to use THORswap. So that's pretty great. And similar thing there, hopefully over time we could work on that one too. And, become the swap function within that would be epic, but this is a good little first step on that side too. So yeah, that's live. So if you're a Trezor user, definitely give it a shot and, give any feedback if there's any issues, things like that, but should be solid and good to go. There was a thread from THORswap too with some details on that. And we'll probably do a tutorial here pretty soon, but it's all straightforward. So yeah, just I remember when we didn't even have Ledger. Remember, like, that was so rumored for so long, and now we got both the big ones. So that's pretty exciting.
Yeah, that is super cool. Like having all the major hardware wallets. I mean, it just shows like obviously THORswap is just like shippers, and they just are always like putting out like new stuff that people actually like want and need, and actually adds the experience of the products and just the usability. So more options is always going to be better.
Yeah, and all these things, all these things that get added to THORswap, they're part of SwapKit. So any integrators that use SwapKit to get all the THORChain functionality, like they're also getting this. So they right away they get wallet support for chains they might not have any experience with it. They get they get all these integrations that have already been built, so hardware wallet support and everything like that. So it's not just for THORswap, but really anyone that ends up using SwapKit gets the same benefit. So hopefully we'll see that in a lot of places.
Yeah, speaking of SwapKit, someone from Li-Fi dropped some fire on last Friday. So I think a lot of people didn't really catch it. That Li-Fi announced their integration with THORChain / SwapKit. So that's like another huge protocol that's just on the uptake, and going to be using all this liquidity. So I don't think there's anything further than that, but yeah.
I know they confirmed THORChain. I don't know if they confirmed SwapKit. So I just want to make sure we don't put out anything that's not. I'm not unless you know something I don't know.
Yeah, we'll see.
But I'm not sure if that was for sure, but we'll see.
Yeah, exactly.
But either way, great to see more big players. Yeah, let's just keep the ball rolling.
Yeah, Li-Fi obviously being absolutely huge. Like they're the guys that do the swaps in MetaMask, and and like that realm of things, EVM only. But like that's something that we were talking about earlier in this week in that discussion with Chainflip and Maya, just talking about like aggregators. And there's so many like big ERC20 aggregators like Li-Fi, Paraswap, OpenOcean, and they're absolutely huge, but they're all just ERC20s, and they're all just like fighting over the same market share, 1inch as part of that group too, right? So once they start making the transition over to multi-chain, then it becomes a lot more interesting of a game, I think, in terms of like the larger vision of like moving everything towards decentralized platforms and using aggregators to find the best routes between chains. And SwapKit obviously being like one of the major, the only player in that space right now, right? Like there's no one else that's even doing that. Rango, I guess. Rango and SwapKit being the only two that are really multi-chain, like UTXO, EVM, everything.
For sure. And with SwapKit and THORswap, like up to so far at least, like so much of it, one of the key things is like keeping to the one transaction thing, right? And that's one of the kind of the key differences between, say, Rango versus THORswap and SwapKit. So any app or whatever integrating this is like kind of getting that like really seamless functionality for their wallet or DEX or whatever, and just doing one signature swaps from getting closer to anything, right? So lots more rolling out.
Yeah, dude. Anything's like kind of the goal here, right? We're inching our way towards that goal line.
Yeah, Mogarky was dropping some alpha about potential L2s and stuff, like using SwapKit, stringing together THORChain with something with like Stargate to then go to all these different L2s either direction in a single swap. So I know that's being worked on, which would be really cool because that like really bolts on another functionality to THORChain. So that would get a lot more tokens right away.
And some of
So
the biggest DeFi markets that are out there, like I mean, pretty much all the ETH L2s, not all the ETH, like I don't actually know which ones are doing the most and which ones aren't, but I know that the market is just huge on ETH L2s in terms of like the amount of trades going on and people swapping and just like, dexes
exactly,
and perps and everything. Like that's where a lot of the volume is.
totally, yeah. That market's been really hot, a lot of activity. So yeah, to be able to go from some like Arbitrum or whatever token to and from native Bitcoin in a single transaction, and then that being just part of SwapKit, and then that being able to be integrated anywhere, pretty cool.
So what's new, Chad? Anything you want to talk about? Savers yield, which I believe, so that vote went through to basically change Savers yield to be a function of what the Savers utilization is. So if the utilization is 50%, then I believe the Savers get 50% of the yield that they do today. Is that correct?
Yeah, I think it depends on like the synth utilization on the per pool basis. But I think like if you're in the Bitcoin pool, which is like the largest by good margin, I think your yield had just got cut down by 50% from what it was like yesterday. I think, if I remember this correctly. Hopefully, I do. And so that extra yield that savers are not getting is going to the LPs instead. And the point of it was to kind of like to get some of the BDC savers to exit the system. We haven't seen it happen quite yet, but it hasn't even been 24 hours yet, so we have to give it more time than that. But yeah, that's basically the change that happened yesterday that was voted on by the nodes.
Yep, and I believe it's based off of it's based off the synth utilization. So like if the Bitcoin synth utilization is at 50%, that means it's whatever how the rate was just half of the yield before. Now it would be half of that at 50%. So it's somewhere around 25% of the yield going to savers. And then if the synth utilization grows to 100%, then it's 0% going to the savers. So it's dynamic just based on what the synth utilization of that pool is. So like if you're in a savers position that is in a really low synth utilization pool, like BNB or maybe Doge possibly. I don't know off the top, probably AVAX. All those will see a lot less reduction in the total amount because the synth utilization is pretty low overall. So it's definitely to relieve some of the strain on dual LPs and just kind of balance out the incentives a little bit.
Yep, exactly.
Lending. Anything you want to touch on lending? Block Science is still doing their stuff, but is it any update on like what's been going on that end?
I mean, right now, what I've seen so far is a document that I kind of like just go over all the failure scenarios or risk scenarios that the feature has, which is all that's been kind of public knowledge for a while now. But it's good to have them all just kind of like written out in a clear document. I think that's what I've seen thus far. They've done some preliminary kind of research on recommendations for the configuration of lending on Start. And so we're kind of going through our conversations and debates around that topic as well. We're probably still, close to a month away from them being done with their process. That's what it currently looks like today. So I don't think we'll see lending anytime, in the next month. But after that, we should hopefully start getting the soft launch going.
Cool. Were they recommending parameters for the soft launch, or are they only recommending parameters for the regular feature launch?
That's a good question. I didn't actually the numbers they threw out so far. I didn't even ask them if it's hard or soft related. I just started asking questions of how they came to those numbers and why not this and why not that and what happens this and that kind of stuff. So that, but I don't know. Actually, I don't know if the numbers are soft or hard, to be honest.
Cool. Yeah, so waiting for some more updates there. I'm also interested to talk about some streaming swap stuff because we're probably like two releases out from streaming swaps, so maybe it'd be good to actually just like because I conceptually understand like how streaming swaps work and like what they do. Maybe we should just explain really quickly like what streaming swaps are, and then like functionally like how it works, like because what needs to be added to like a THORChain memo, like what parameters can you specify and what just like gets determined automatically, like what's the like end experience like of the user. So you think you could just like give a rundown of some streaming swap
Yeah, yeah,
stuff just to kind of get the overall primer.
yeah. So streaming swaps is this concept that like if you were to take the network today as it is now, and you have some large trade that you want to make, if you break your trade up into smaller trades, right? If you do it into like two trades, you basically would pay half the fees that you would pay if you did it one single trade. If you did it in like 10 swaps instead of one swap, you pay like 90% less in swap fees, right? And so this is something you've always been able to do since the beginning, but the change is that it allows you to accomplish this without actually managing those individual trades and swaps, where you don't have to manually like send a transaction every once in a while and so forth and so on. And you want to do those trades like you don't want to do them all like within 5 seconds of each other. Like you want them all to be done like maybe a minute apart from each other, just because you want to give arbitrage bots the ability to arbitrage in the opposite direction of your trade to kind of rebalance the pool so that you get good price execution along the way, right? If you just blindly trade every trade like sequentially, then you wouldn't get very good price execution because you keep on pushing the price in a direction that's not beneficial for you. So the first component is just understanding that like if by taking one trade and breaking into many trades, you pay less in fees. And the second part is that the network basically does this part for you, and so you do a trade, the network saves it into the swap queue, and then like does like little mini trades along the way, and then at the end of it all, it sends you the resulting BDC or ETH or Atom or whatever the other asset is. You can still have trade targets. So you can say like, oh, here's one BTC. I want to get out, 100 ETH from the other side or whatever, some number, whatever it is. And if it will try to do that to the best of its ability. And if it can't satisfy that ratio between the input asset and the output asset, it will do a refund or even a partial refund. Like the first few trades were successful at that ratio, but then there was a price change in the market. ETH went, up in value or something like this or something, and then all of a sudden the rest of the trades can't, get at that specific ratio between input and output asset, and so they'll do like a bifurcation, meaning that it'll send you some of the ETH, send you some of the BDC back as a refund. That's kind of like a partial execution in that scenario. And so when you're doing the streaming stuff, there's really two like attributes or two parameters that you can specify. One is like the frequency of how often you want like each individual trade to happen. I think probably the recommendation is like 10 blocks, which is approximately a minute. But if you want to do like a dollar cost averaging thing of like you want to make a trade many times over the next 24 hours, and you want to do like every hour make a trade or something like this, you can do that if you want to do that. And then the other parameters you can specify is like the quantity of swaps that you want to execute on. So the more swaps you do, the cheaper the fees, but the longer the time takes for the swap to happen. There are limits in terms of you can't just put in like a million swap quantity, like the network wouldn't allow it. It has a minimum like slippage on each individual like mini trade, which is I think it's going to be set to probably to 5 basis points. So if you have like a small trade, you can't break that up into 1,000 trades. You have to have a larger trade to do 1,000 swaps, so to speak. But all in all, this basically allows people that have like whales to come in with $30,000, $50,000, or millions of dollars, literally multi-million dollar swaps, and trade that on THORChain with a 5%, 5 basis points slip, not 5%, but 5 basis points. So that would be just like, best price execution to buying and selling Bitcoin and Ethereum and other blue chip assets like overnight on THORChain.
Yeah, dude, we're all super pumped for streaming swaps. There's a couple like small implementation things that I'm like wondering about, especially like because the real unknown is just like what happens in the time period of like you execute the swap and then the swap completes over over several hours possibly. So like you mentioned, refunds and partial refunds. So when you specify a limit, so what happens if the swap is streaming and it dips below that limit? Are those fills like partially executed, or are they like those aren't? But then if the price returns back above that threshold, then it's just aborted. Like what actually happens when the price changes like out of your favor and you have a limit specified?
Right. So let's just say you're doing a streaming swap, and let's just say that there's 10 swaps occurring within this streaming swap. The first 3 trades went through just fine because the price hasn't shifted very much. And then, a minute later, the price dives down, right? And you no longer get that ratio that you're looking for. So then the next 2 trades fail because they don't get that price execution that you're looking for. And then a moment later, the price goes back up to to the previous value or higher or whatever the hell it is. And then it's able to execute those last 3 trades or last 5 trades or whatever the hell the number might be to like get the execution. So then at the end of those 10 trades, let's just say 7 of them were successful and 3 of them failed. So the 3 that failed, you'd get back the Bitcoin that you sent in to begin with, and the 7 that were successful, you'd get the ETH that you wanted to get on the other side. So you get like this like partial fulfillment of like, we were able to get you this, but weren't able to get you that. And so you get back your Bitcoin, you get back, and then you get your whatever ETH you were able to get out of that scenario.
Got it. So if it dips below the limit, then just that fill isn't executed, and you just keep the in asset, and then
right.
If it goes back in your favor, then the swaps just continue. Interesting.
Yeah, I mean, I suspect that like for most traders, because of that 5 basis points like minimum, like most traders won't really need more than like even 10 swaps is a lot of swaps. Like you can get $100,000 or a couple $100,000 with 10 swaps. Like that's pretty darn good, and you will probably satisfy the vast majority of the traders on THORChain, which is within 10 swaps, which is only going to be like 10 minutes, right? So like the price changing during a streaming swap is definitely possible within a 10-minute period. Yeah, it can, it cannot. Like it's not too fast not too long of a time rather. If you're doing like a $5 million trade, which that would take maybe like every $1 million is like 4 hours, right? According to our current depths of the network, or something like close to that. If you were doing like a $5 million trade, it would take you quite a bit of time, right? So it would take you basically like 20 hours or so, or whatever the hell it might be, or how much of it's 4 hours or 3 hours or whatever it is. But like then you can get that kind of significant price changes over that like long period of time, which case you would get partial fulfillments. But if you're dollar cost averaging into it, then your trade slip would be set to 0, right? Because you're not really you're just kind of like following the market at that point, not really trying like a specific trade of it, like I get it in this, right, get out that specific numbers. You're just like, I'm just going to dollar cost average, just buying it, whatever the price is, just following the market. And so for those people, just put like 0 as their trade target. Like now you're DCAA, right? Now you're just like, we're just going to follow the market, and like 100% of your trades will basically be successful probably, unless there's like, trading is paused or something like this during the process.
Yeah. So if you have like a really large trade, so let's say you wanted to swap $10 million, but you like obviously there's a 24-hour limit. So that's probably that might be too big for a 24-hour limit. Let's say you don't care about paying a little bit more for slip. So you're just like, oh yeah, well I'll pay 80 basis points in slip, and can you change the execution time and like the sizing and things so you could
Yeah,
put through like basically whatever size and just pay the slip that you want.
right. So if you had a $10 million trade, you could tell the network, say, I just want to do this in 10 trades, right? And if you do it in 10 trades, you'll get a 90% reduction in fees, which will still be like significant. It would probably be considerably higher than 5 basis points. But you can do $1 billion trade hypothetically, although it's obviously it's unrealistic, but like hypothetically it's possible, right? And you can just do it in 100 trades or some number like this. If you do 100 trades, it's about a 99% reduction in swap fees. And so maybe that's good enough for you. You don't really need to get 5 basis points. You're okay with getting 8, or you're okay with getting 12, or you're okay with getting 25, because 25 is what most of the industry gives them anyway, right? Like Changely and Change Now. I mean,
Yep.
Coinbase does like close to 7 or 10% basis points. So like, if you're okay with getting 10 basis points, then you can go ahead and opt in for that and get a larger quantity of funds put through, or just shorten the time, right, of it. So like, you're really just trading two things. Like you're saying, I want a slower execution, but better like slip fees, or I want like my trade to be now more immediate and paid more in fees, right? And you can just balance those two things as much as you want.
And you can also just say like, just put a flag on like, hey, just stream this swap, and it just kind of takes care of all that complexity for you, right? So you have the option to say
Right.
to specify or to not.
So if you, in the actual memo itself, where you specify a trade target today, you can just specify a trade target and then put /10, 10 representing like the number of like block interval, like every 10 blocks to do a trade. And that's it. The network will actually compute for you, like what is the optimal amount of trade volume, right? Or number of swaps that you can do for given this size and given these pools, blah, 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 these things. And you don't even have to calculate it yourself. You can just like say /10 and then just like fire it off, and the network will just like do the best it can to give you the best price execution possible.
Yeah, I hope we get that out soon. I mean, I would love to see it.
Dude, I would love to see it too. Like all of a sudden, like THORChain becomes like the place we can, just the best place to buy like crypto. I mean, like it's kind of what it
Yeah.
becomes. Like you can, even if you're like this some sort of gigantic whale with millions of dollars, it's probably cheaper to trade on THORChain than it is to even use OTC dealers sometimes, right? Like that's nuts. That's crazy.
So, Cal, you said it's only a couple of releases away. Does that mean is it on StageNet? Is there testing, or like is it good to go? What's going on that side?
Chad can speak to that better. I just know that like it's not going to be in whatever the next version is. So like I guess tentatively for the next version of THORnode, but
Yeah,
I'm
so
not sure
it's
what's gone into testing.
the code itself is slated to go into version 115. We're on 113 right now, or 114 is coming out in the near future. And so the code's probably going to be going into 115, and then when it actually gets launched, and then we'll launch it on StageNet relatively quickly. I'm assuming, and then it'll go through its testing procedures and processes, all this kind of stuff, and then when it gets launched on mainnet for people to actually utilize, like that's something we don't really quite know the answer to that question quite yet. But hopefully the code will be on mainnet and available to run within, I don't know, 2 to 3 weeks.
Yeah, at this point, it looks like streaming swaps will be the next major feature to land because, I mean, BSC landed, but we just can't launch the network because there's no space under the security cap. And then lending is undergoing this economic audit, which, obviously we don't want to rush things there.
Yeah, by the way, like the streaming swap concept, like is not just for like for like swaps itself, but it's also can be embedded into other aspects of the network to make it other aspects, more affordable in a sense. So like, for example, streaming into a saver's position or streaming out of a saver's position, for example, order books can be partially fulfilled and be cheaper to like trade or orders on an order book with, like it actually enhances a bunch of other features within the protocol now that a new primitive is being established. So V1 will probably not have those things, I'm assuming, integration into savers and like other stuff. V1 will just like launch it simple, clean, focused, not try to add too many bells and whistles and that kind of stuff. But once we have that basic primitive working in the protocol, we can start like pulling upon that to utilize to like kind of empower other aspects or other protocols in the network.
Cool. Is there any other major new things you guys wanted to talk about? If anyone else wants to come hop up on stage, we can let people up for questions, but not sure if there's any major new developments.
Are you poking at something, Kyle?
I don't know.
Yeah, Chad, is there anything else you're thinking about?
Yeah, Chad. You tell me. No, I have no idea.
Yeah, I mean, so I'm hesitant to talk about this topic just because it's not fully fleshed out yet, and devs and people are still kind of like working on it. But there's just kind of this new concept that's being floated around amongst the devs and some work's being done to do some research on it and its viability and these kind of things. But what's fascinating about this concept is that it basically allows for anybody to be able to contribute to the security of the network. So right now it's really just established for people who have a high amount of rune, like 300,000 or greater, and somebody who can run complex infrastructure, Kubernetes clusters and this kind of stuff. And that's not really like a large quantity of people in our community that can do that, to be able to have the skill sets to both the capital requirements and the technical requirements. And that's just created a real like barrier for scaling the security of the network efficiently, because there's just not a lot of people to pull upon to do that kind of work, in a matter of speaking. Right. And it's been a long kind of like asked, or one of the most asked features of, in THORChain's history, from what I've gathered, is just like, how do we can I bond up to somebody else's node and I can make it, earn some rune myself, but I don't need to have 300,000 rune, and I don't need to know how to run Linux boxes or servers and this kind of stuff. And we've always kind of shied away from that because we couldn't figure out a way to be able to do that, but also maintain economic security and not break it. Because when you just bond with somebody else's node, in some effect, you are giving them a coupon to attack the network, right? It's now cheaper for them to do a civil attack and potentially make a profit, just because you're giving them your capital to use to attack the network, in a matter of speaking. And so we were always kind of very hesitant to do something like that, because it was just, it reduced security rather than adding to it. But people have been nonetheless knocking on our doors and calling out on Twitter and Discords and stuff like, I want to earn my rune, how do I do that? And we've always been hesitant to do so until we figure out a way that actually makes sense. And so we've come up with a new idea of how this can be done, where you can you can lock up your rune, you secure some layer one asset like Bitcoin, for example, in your own wallet, and it can be multi-sig, it can be a ledger, it can be a trust wallet, it can be arbitrarily anything you want. Doesn't really matter. And so the funds are sent to your wallet, and you hold it there, and you don't do anything with it. You don't mix your current wallet with this wallet. This is a completely separate wallet for this specific purpose. You don't mix and match here, because you'll hurt yourself if you do. But you just basically hold it there. You don't do anything with it, right? And as long as the money stays there or sends back to the network itself, to one of the Asgard vaults, then you've got nothing to worry about other than liquidation risk, which is another topic we'll talk about a little later. But by doing so, you are taking funds away from the Asgard vaults, which means that a person who wants to cyber attack the network, the amount of value that they can steal is limited to the Asgard vaults and not your ledger or not your trust wallet, and that you have, basically offline storage in a literal sense, offline storage. And so, like, the ability for somebody to cyber attack the network and steal all the Asgards, the value of doing so has just been reduced. Because instead of having all the 100% of the BTC in the Asgard vaults, it's now, let's just say it's 50-50, right? Between cold wallets and hot wallets. Hot wallets being the Asgards, cold wallets being, anybody who wants to earn rune in the rune and not have a lot of rune or not have a lot of technical talents or skill sets to run servers and such. So this is actually providing a significant value for the protocol, because it means we can scale up the pools, and we can scale up the depth and the TVL and the security of the network in a way that anybody can participate who wants to participate, not just the rich, not just the tech savvy, but just basically anybody in this community who wants to do that can contribute to that system. And that's like significant. I think that's been a problem that like I've been thinking about on this protocol for like years now, literally years. I've been working on this protocol for like 4+ years now. It's been a long time I've been on this thing, and I've never been able to figure out a way to do something like this. And I think we finally cracked it after all these years of how we can accomplish this in a safe way. Yeah, I mean, it's pretty cool. I'm excited to see the community's response to it once we actually release the document that kind of lines out the plan, or how it's all structured, how it's mathematically designed, and all these things, and then people can start responding back and kind of asking questions and that kind of stuff.
Yeah, dude, I can't wait to see it written down and then like actually dig into it. Thanks for sharing. You didn't need to share that, by the way. I didn't mean to pressure you into sharing anything that wasn't ready.
No, it's all right.
Obviously,
it's
it's early stuff, so.
It's like we're still working on it, which I didn't. There's no public article yet, but like I want to talk about it. I'm super excited about it. This is key. Like, this is going to help us scale the security and the pools and their depth like quite significantly. So it's just like I'm super excited about the concept. But like I want to like caveat it and say that like that this is it's a new idea. We're still working off the kinks, so no matter speaking, getting more voices and more opinions about like what's right about it, what's wrong about it, what can we fix, blah blah blah. We're still doing our research. So don't hold my feet to the fires later on. Like, we might find there's an issue with it and we can't go down that road. That's possible. We might find that it works great, or might find that it doesn't work at all. Like, who knows, right? It's still going through its process. It's looking very good thus far from the people we've spoken to and the research we've done so far. So it's looking quite positive. But just caveat to say that that can change with new viewpoints, new input from different team members and outside the team as well.
Wow, super exciting! Dang, yeah, I can't wait to hear more how this develops and read it written up. Very, very cool.
Yeah, I just don't want to get too ahead of myself, because there's so many other things that we need to ship and get out the door, which is just with that. All right, we need to step back.
I don't even
relax.
I like a million questions popped up in my mind, and I'm like, I don't even want to ask him yet, because it's like, let's let it get cooked a little bit, and then we'll get to all the details.
You can ask your questions. It's fine. And I'll do the best I can to answer them. If I don't have an answer for them, I'll tell you I don't have an answer for them. But you're welcome to ask.
Well, so you're saying essentially you stake, as a user, you stake your rune into the network, and then you are securing other assets. You're literally you right. have I have the keys right. to some Bitcoin. So then right. how is that liquidity, that Bitcoin liquidity, still accessible to the network if I'm holding the keys?
Yeah, good question. So this was one of the difficult things to solve in the sense that the original design of what we call vault nodes. By the way, this whole idea of what we're talking about came from our last spaces, where Mogarty came onto this space and said, "Hey, what about vault nodes?" I'm like, "Oh yeah, I completely forgot about those vault nodes." And then I started thinking more about it, and I'm like, "Oh wait," which is kind of funny. But yes, one of the issues initially was that you would run some servers, right? THOReau plus Bifrost plus a player chain daemon, and then the network would just like query your node and say, hey, send some Bitcoin to this Bitcoin address way over here, to Mogarty's address or something like this. And so you had to keep the servers online so they had instant access to that capital and could send it out to some BC1 address or something like this arbitrarily. And the problem with that idea is that it still kept high technical requirements to do that. Like you still need to run that infrastructure, that servers. You need to have uptime, like all these things. And that just kind of like, in some ways, didn't quite accomplish the goal of what we wanted to do, which is to make it accessible to everybody, not just make it accessible to technically savvy individuals. And so how do we deal with this scenario? So we wanted specifically that the network itself does not have direct access to that capital, which sounds bad at its like face, but let me explain why it's actually a good thing. The reason why that's a good thing is because if somebody were to cyber attack the network and had the ability to call, Chad THOReau's, service, whatever, server, and like have them send back to the network, well, then that doesn't really accomplish the goal of like, securing assets, because in the end, if you cyber attack the network, all the cold or vault nodes, whatever, would get their capital stolen. And then what are you going to do? Like, it's at that point, it kind of defeats the point, right? But if they can't actually directly access the capital, then there's no way for them to like, hey, to call Chad THOReau's Ledger wallet and say, hey, send me all the Bitcoin you got. You just can't do it. Like, it's literally offline storage. So then, how do we get the capital back from cold from Chad THOReau's ledger to the Asgard vaults, which is like kind of the hot wallets, right? How do we do that? And so here it's just actually using just economic incentives. And so the yield that you have as running one of these cold wallets is relational to two things. One is how much of a particular asset, called Bitcoin, for example, how much Bitcoin is in the hot wallets versus how much Bitcoin is in the cold wallets, right? And so there's a balance between these two places, right? If there's too little on the hot, then the cold wallets make less money. If it's too much, if it's almost everything's in the hot and very little is in the cold, then the people in the cold make a lot more money. That's the first component to it. But the second component to it is that you can get into a place where things get into a negative interest rates, right? So if you get to a place where the collateralization ratio between the rune that you secured and the Bitcoin that you're holding in your ledger, if it drops below a certain amount, let's just call it like 150% like ratio between the two of those things, then you're going to start getting negative interest rates, and you're starting to basically lose your bond, right? And so either you're going to take the Bitcoin you have in your wallet and send it back to the network, right, just by making a transaction, signing a transaction with your ledger and sending it back to the Asgard vault, which you can do arbitrarily whenever the hell you want, or you can just bond up some more rune and increase your rune side, and everything's fine. So the economics are still there to push people to have the layer one assets be sent back when the network needs. And it also can happen like negative interest rates when the hot wallet becomes smaller than the cold wallet, right? There's like a little like balance that we can strike with by a Mimir configuration where we want 50% cold and 50% hot, right? And so if the colds become greater than the hot in terms of number of BTC that each are holding, then you get to negative interest rates, which means that people who are holding cold are like, you know what, I'm losing money at this point. I better, send back the Bitcoin to the hot wallet, and then, and partially close or fully close my position as a cold wallet, right? And so you have to like actively manage your position, but it's more like passively managing than like actively managing. It's not like you have to run a server to manage this, although you could do that if you wanted to do that. And I'm sure some people will do that, and those people will probably allow bond providers, so you can bond to somebody else's cold wallet if you want to do that and not have them worry about like 9 months might do that potentially. But anyways, like, so when we get too low on the hot, so we don't have enough hot wallet, we have too much cold, the negative interest rate just kind of forces everybody to start dumping their BTC back into the hot wallet until we're back to balance. Did I answer your question, THOReau?
Yeah. It'll take me probably another 1 or 2 times to fully get it, but yeah, it makes sense. And, it sounds really, really cool.
people should be aware, like you can get liquidated here, right? You're providing Rune, you're receiving some layer one asset like Ether or whatever, and if the value of those things get too out of skew, the network will liquidate you. That's why the network has the ability to claw back the Bitcoin whenever it needs to, right? Like even if like Chad THOReau had some Bitcoin in his ledger, and Chad THOReau got hit by a bust tomorrow, right? And the Bitcoin is basically locked up forever. The network still has the capability of pulling that BTC out of your wallet, metaphorically speaking, and put it back in the network through a liquidation process. We take the room that you had given us, we put some of it back into the pool, and the remaining gets put into the reserve, and that causes arbitrage bots to pull the Bitcoin back into the network. So even though we might get a different UTXO, in a matter of speaking, the same number of Bitcoin is still in the network. So even in a scenario where like Chad THOReau has become completely, offline, refuses to do anything at all, the network always has the ability to pull back the Bitcoin if it needs to.
Good to know in case I get hit by a bus. Yeah, that's super like fascinating out there idea. Like, yeah, really cool.
Yeah, it's great. It allows us to like now.
Yeah,
The
sorry, I can't hear
TVL
Chad on my end, so I was kind of listening on another device, which is just like all out of sync. But no, thanks for sharing all that info about the the new, I guess you call it cold vaults. Yeah, so
cold vaults, cold nodes. We're still working on the
really
name.
sick.
You hear me okay or no?
I can.
I'm not sure. Yeah, I don't think THOReau can hear me.
Or Cow, I can hear you.
Sorry, Cow. Yeah,
Yeah, okay,
yeah,
I
sure,
can hear
Cow
you
can.
too.
I think Cow. Yeah,
can't
I
hear
think
other
you're
chat.
just like 5 to 10 seconds behind Cow, but I
Wow.
think yeah,
All right, sorry.
or
I'll
maybe
shut up.
not. Now it sounds like. Wait, say something.
Yep, right now.
Okay. Yeah, I think you're back. I think we're back.
We're so back.
One of the
I
interesting
still
things
can't hear
is
the other
that
chat though. So
Ah,
I could hear him through my other. Trust me, there's a juggling process going on here. But yeah, the cold
freaking
store.
Twitter.
should I
Yeah.
leave and come
Come
back?
on, please fix
I'm
this
gonna leave and come
platform.
back.
Um, but yeah, I mean, hopefully we can like really just get that design and just like kind of run with that in the future. It sounds like a really interesting like second half of the year like kind of project to focus on after all the other projects that we already got going on.
Yeah, he's reconnecting, but yeah, agreed. I mean, single sided rune, like, in any idea that potentially brings in single sided rune is freaking fascinating. So
Yeah.
stoked to hear it.
Testing. Cow, can you hear me?
Yep. Got you. Yep.
Good.
Sorry. It was my fault too. I tried to go off my Wi-Fi so that wouldn't be a problem, but then it just created the problem itself. So
Yeah. Well, so one of the fascinating things is like how the TVL, like the TVL cap, is calculated would be slightly different than the way it is now. So right now, it just calculates it based on like the total value in the pools, right? Which is basically the same as the total value in the Asgard vaults. But now it to be calculated based on the total value in the Asgard vault, not total value in the pools. And so the you can scale the pool depths to be 3-5x larger than the value of the bonds of the validators combined, and still maintain economic security in that scenario, which is just like that kind of blows my mind in a matter of speaking. And so you can really like allow the pools to get a lot deeper and maintain the same validator set as we have now, which is kind of crazy.
and yeah, and just locking up a whole bunch more rune.
In locking up a bunch more room, like we're creating another demand center for the rune asset as well.
Right. Cool. Thanks for sharing all that. Anyone want to come up and ask any questions about anything really? I guess in the meantime, there is one thing. Tomorrow morning, we're doing a Twitter space with RocketX, which is a exchange. It's kind of like a centralized exchange aggregator. They have a bunch of different routes. It's like any other DEX aggregator, but it uses a lot of centralized routes. They just did an integration with Rango, so we're gonna hop on with them tomorrow and just kind of share about about THORChain. Just spread the word over there to their audience because they have our roots on there now, and we're very competitive in pretty much a lot of the major swap sizes and roots. So pretty happy with that. They sort by by execution, and like at a good number of sizes, we're actually on the top of that list. So just happy to see another integration go through. And yeah, we're going to do a Twitter space tomorrow morning at like I believe 10 a.m. Eastern. So if anyone wants to come up and ask about anything else about cold wallets, cold vaults, uh, streaming swaps, etc.
You probably already went through this, but it already exited my brain. So where would the yield for the rune staker come from exactly?
Oh, this for the cold node stuff?
Yeah.
Yeah, so I'll walk you through it. So starting off, you have the system income of the network, right, which is comprised of the swap fees plus the block rewards, right? That's the total system income of the entire network, right? And now
Mhm.
we have the incentive pendulum that kind of distributes that value, right, towards the LPs versus towards the nodes or the validators, right? So forget about the LP side for a second. Just focus on the validator side. So let's just call that 100 rune is the reward for this particular block, just arbitrarily. 50% of that rune goes to validators immediately, right? So they're going to get half that just right off the bat. They already get half of that value. So 50 rune is already going to their wallets in manner speaking. And this is partly to ensure that like running a validator will probably always be more profitable, and it's kind of ensuring that running a validator will be more profitable, of value per rune, uh, would be more profitable than running one of these kind of lower level cold wallets in a manner of speaking. So you give them 50 initially, you got 50 left over. Now we have to decide, how much of this 50 goes to the nodes, the validators, and how much goes to the cold wallet kind of operators in the manner speaking. And so this is calculated based upon a couple different things. One is we have to look at, this is calculated on a per asset basis. And so we split that 50 up into like, okay, this much is applied for Bitcoin, this much is for Ether, this much is for Doge, this much is for this, whatever it is. And all that's relative to like probably the value of each of those assets in the network. Bitcoin's worth more than other ones because there's more Bitcoin in the network in terms of dollar value. And then once within those assets, we split it up between validators and cold wallets based upon the amount of cold versus the amount of hot, kind of balancing these two things out, right? And so if there's no Bitcoin and there's like someone put their first Satoshi in on the cold side and 99.99% on the hot, then basically. Yo,
Hey,
got rugged.
sorry about that.
It's all good.
We're back.
Uh, Yeah, I've just this short little recap of what I was just saying is that the yield is basically shared. The yield that the current validators get today, they're going to share some of their yield with the cold node operators. How much they share is just about how much value they provide to the network.
Does it take some away from Will it like lower incentives for regular nodes in the short term?
Well, lower incentives for regular nodes. Yeah, I guess so. In some sense, like those people will receive less of a reward. Like hypothetically, right now, let's say I had a bunch of rune on the sidelines here, and I wanted to bond up with a new validator. And if I were to do that right now and churn to the network, tomorrow, or whatever, then every validator that's currently in the network before I join would get slightly less income than they did before because now they're sharing it with 91 people instead of 90 people, right? And so that's already true in today's network of like, if more capital comes in to bond the network, then that is shared. Each individual who's earning capital before would get slightly less because they're sharing it with they have a slightly smaller percentage of the pool, in a matter of speaking, right? And this is just like another mechanism that somebody can contribute to security. In which case, adding to security means that liquidity is shared, you know, uh, differently in a matter of speaking. But yes.
Got it. Makes sense.
And conversely, like if I am a validator right now and I do have a node with a million rune in it or whatever the hell it is, then and I decide I know I don't like this, I can go ahead and leave. And the act of me leaving causes the yield to increase for the remaining people behind, right?
I'm guessing also like a lot of node operators are obviously rune whales, and they might like have more than enough for one node, but like not enough for two, and they might do both
Yeah,
even. Like,
they could do both. There's no reason why you could. Yeah, you could totally do both if you would really wanted to. But in the end, like it's just like this concept would allow us to double, if not, you know, nearly 10x in terms of like what we can store safely and securely on the network. The pools in the network could greatly increase from this, right? And still maintain economic security, even though we don't have 10x the bond on from the validator side. It's just providing through other mechanisms, and that's really like even if a couple of validators leave or whatever because they want that they don't want to share their yield or whatever it is, that I'm actually perfectly fine with. I mean, I wouldn't do that if I was a validator, but if somebody wants to, they can. And to be honest, like losing a couple of validators because of that, and then gaining 2 or 3 times the amount of capital we can store in the pools is like totally worth it.
So a question on that. So wouldn't a node provider's return also potentially go up though? Because as you raise those caps, more capital can come in, more swaps, lower slippage fees, the whole flywheel. And so wouldn't that potentially kind of cancel the potential loss out?
Good question. I don't really know the answer to that. I mean, you're right in the sense that if we get more capital comes in for the bond by these cold nodes and pools get deeper pools does create more fees and more trades and more of that kind of stuff. And so that naturally will increase yield for the system income of the entire network, which will obviously trickle back down to those validators. What the actual balance is between those two things, who knows? But you are fundamentally correct in what you're saying, though. But we don't really know, like, if we get a 2x, in TVL, do we get 2x in trade volume? I think they're largely correlated, but I'm not sure if it's like a 1-to-1 in that sense. In which case, the liquidity fee income would double in the hypothetical, but the bond reward would not, because the bond reward's the same. Doesn't matter how much TVL there is or how many swaps there are. But at the same time, well, then maybe the fact that we got double the amount of liquidity in the network, that creates a bunch more buy pressure on the rune asset because the number of LPs has increased, or the capital LPs are providing has doubled, or we've doubled the number of savers or whatever the hell it is, or created another demand center for rune. People want to earn rune in their rune, like another reason to buy a rune. And so like all that creates buy pressure on the rune asset, which if that's the case, then the yield goes up because the block rewards value per block is now more than it was yesterday. So it's a complicated thing, a lot of kind of different angles to look at it, but you bring up a valid point.
Very cool. Thanks so much, guys. Always a great chat.
Yeah. What's up, Grassroots?
Hey, Chad, how you doing?
What's up, brother?
Just got a question. I want to bit different here. So there was a discussion regarding the revamp for Mimir. I think it's issue 1510. I just wanted to see whether you had any more information. I'm leaning to the buttons fast tracked, and that's giving nodes a bit more power over controlling the settings of the network. Just wondered if you had more information on that one.
I'm trying to refresh my memory on this one. This one is like it's the restructuring the way the admin mirror works and starts to decom that process. Yeah, right.
Yeah, to a degree. Obviously, some points, some things like pause lending might be needed to enable features when they're introduced. So some controls needed, but I think expanding the control up beyond the make pause and halts and stuff like that.
Yeah, I think idealistically speaking, we in the long term we want to get rid of the Mimir admin. It's played a good and practical use for the protocol, and it's like growing phases and ideation and beta phases and this kind of stuff. But over the long term, we actually want to get rid of it. And I think part of what this was proposing is that that a minority of nodes can enact a change in any particular Mimir. I think it requires like maybe 2 or 3 different nodes to agree on something for it to be set. That is assuming that there isn't a consensus on some other setting of that same configuration. So it's just a way for us to kind of get the nodes to play more of a role in managing the network rather than the Mimir admin doing that. And I think that's probably a good thing in the long term. We have to do an audit though. Before doing that, we have to do an audit of those Mimirs and maybe demolish some of them so they're not Mimirable before doing something like this, to make sure that we know what the risks are of 1 or 2 nodes maliciously changing one of these Mimirs and then causing some sort of downstream effect that could be bad or dangerous for the protocol. So there's more auditing that needs to be done and research needs to be done on that kind of thing. But I think it's a good idea in the long term. I don't know. I don't think there's any plan right now to implement that anytime soon. There's a lot of things kind of in movement right now, but that's something for the long term.
All right, cool. That's all I want to know. No, yeah. The audit needs to occur first.
Yep, good question.
Hey, Chad.
That's all I have.
Oh,
Yep, how's it going?
hey, how are you?
Good.
Just had a quick question. So in like 5 years, what do you think is the final form of THORChain in terms of your vision? If you were to like bullet point all the features that it can have, multi-chain swap, streaming swaps, lending, go down the list. What is the final form would look like in your vision?
The final form, like as I would say right now, and of course this is like privy to changes at some point in the future if there's reason to. But the intention that I have in the next 5 years, hopefully, is for THORChain to become the biggest exchange by trade volume in the world, bar none. Bigger than Coinbase, bigger than Binance, bigger than Uniswap, bigger than all those guys, and doing more trade volume and better price execution than all those guys can reasonably execute on. That's one of the things I think I'm really interested in getting into place. I think we're getting there with streaming swaps. We're getting there with finding ways to scale the security of the network, scale the pools of the network, all this kind of stuff. That's the first part. I think I'm hoping that lending will be successful in what it's gearing to do. Obviously, I don't know that it'll be successful. I think it will be successful, and I hope to be successful, but it's very novel, it's very new, and so we really can't put all our chickens into that basket quite yet. And technically, even if it launches and it goes very well for the first few months or whatever it is, we don't really know if it's successful quite at that point either. It's really going to take at least one bull market and one full bear market as well. So we probably won't even know until like the end of the next bear market whether or not the lending design works in the long term or not. So it's gonna be, we can't count our chickens too early on that particular one too soon. I would like to see order books done on THORChain, being one of the best places to make orders. And then the other thing I would really like to see done, possibly, if we can figure out a good implementation of it, is perpetuals. Perpetuals allow us to do almost instantly do a 10x in trade volume. We can accomplish that without having Oracle dependencies, which is what every other DeFi perpetual has, some sort of terrible Oracle dependency. If we can accomplish that task, I think that would be pretty amazing to do. At that point, THORChain would just become so ingrained and integrated into every wallet and every DEX, and even most centralized exchanges, that it would just become one of the most critical and bare fundamental pillars of the entire, one of the fundamental infrastructure pillars of the entire industry. Whether that happens in 5 years or not, or 10 years or not, I couldn't tell you that. But that's my intention. So that's when I'm making ideas or advocating for certain positions or whatever. Like this, it's in guidance of that viewpoint.
Gotcha. Thank you. Thank you very much.
Yeah, and I think the key part of that is really just baking it into as many places as possible, and just having more and more protocols that rely on THORChain to, execute cross-chain trades, and just really lean on the strengths of this network, and just really becoming the backbone of cross-chain DeFi. Like that's really what the end state has to be. And whatever features are on top of that, whether there's whether they figure out perps or not, and all the other stuff, what features are on top doesn't make so much of a difference as just being the backbone for everything. So
right. Yeah, I saw Jay Powell the other day, who's the chairman of the Fed chairman, and he was saying how Bitcoin has staying power, right? And it's his way of, I think, just acknowledging that Bitcoin's not a fad. It's not going to go away. And I think part of the reason why he says that is because that Bitcoin is so integrated into so many different industries and businesses that it becomes, hard to remove it, right? So many people are critically utilizing it that it kind of just has this adoption that's hard to undo. And because of that, it makes it more safe as an asset, because it's just ingrained in so many things. And to Cow's point, I would love to see the same thing happen with THORChain, where it's just integrated with so many different places, both centralized and centralized, that it just becomes ingrained to everything, and people can't imagine a world without it, right? And then it becomes indispensable. At that point, the staying power is basically forever, more or less. Cool. Any more questions?
Yeah, does anyone else want to come up? Sorry about the cut in the middle of that, but the rugging is nonstop today.
God damn it, Twitter.
What makes me sad is that Twitter really does have the ability to become the world's largest radio network / podcasting place. It has the ability to be literally the center of all that, and this is what we're stuck with.
Yeah. Yeah.
Forget about kindness.
They're on the skeleton crew, I guess, right? Still, so they don't have as many people working as they used to. What up, kindness?
Hello. Good morning.
Hello. Good morning.
Good morning, this is kindness.
Hello.
Hey, do you have a question for us?
Yeah, I have a little question. I love the engagement on THORChain. It's nice, but despite the current state of the market, Thor is actually at 0.9. So I guess, I don't know, it's more like a statement. As the bull run approaches, we are expecting Thor to definitely go higher and have a new all-time high. So I don't. make a statement here if it's of course it's because there are more engagement and so many more events are coming up from what we've discussed so far.
Cool. Thanks, man.
I'm not sure if I heard a question there or not. I'm not sure.
No. Everyone's hyped up, Chad. We're getting ready.
Okay.
Just some price hopium.
Where?
Price
Yeah.
hopium. Yeah,
We need some hopium in here.
We all have some price hopium, I suppose, right? But I would say, like, just stay focused on the fundamentals and keep shipping. You know, think in the long term, not in the short.
I know. Well, it does bring me a lot of faith, just like because there really is never stop shipping. It's like there's always like we're always iterating and just like doing something. But it's not just building something for the sake of building something. It's building things that need to be built, right? And putting them into places where they need to be. So it doesn't feel like, oh, this is just like, this is just some kind of like useless project that just like does, that just does things just for like tokens or whatever. Like this is building infrastructure for the entire industry. Like that's why this whole thing is different than like pretty much anywhere else that I've seen, at least on like Twitter or just like anywhere else that people like talk about this stuff. Like it's a completely different conversation that we have here, because we're like, we're actually thinking about how we can change the space going forward and bring the services that like people need that we want people to rely on, and people want to rely on it. So
yeah, absolutely.
Brought up Rune Rambo. What's up, man? You there?
You're muted if you're trying to speak.
Yes, thank you.
There you are.
Hello there. The question is there an endpoint available in Midgard or THORnodes for querying if synth minting is available or not? Currently it's not because of the hard cap, but the pools still show minting synths is available.
I think the quotes endpoint already does this. It kind of like figures that out when you do a quote for swaps. I don't know. I'm not sure about Midgard. I haven't looked at that code for forever ago, literally. So I can't really tell you that off the top of my head. But I think the quotes endpoint will tell you whether you can mint synths or not.
Okay.
Yeah, if you try to do a quote, it'll say like failed to simulate swap, like hard cap exceeded or something.
Yes.
Yeah.
Although actually, that's reminding me that is one thing that the Thor Wallet team asked to put into the next version, just for like something to check for the hard cap, like an endpoint to easily query. So that should actually probably be added. I need to look into that, because that would make a big difference just in terms of UI, because it confuses people, because they're like, oh, it says like 90%, it's like 20% full, but you can't add. So it's like just having another flag to just say like, is there room or not? I think could be useful.
Cool.
Yeah, 100%.
Second question, more of an idea. Would it be possible to make shared synth pools between Maya and THORChain? Something like cross-platform pools?
You mean like a synthetic THORChain Bitcoin and a synthetic Maya Bitcoin pool?
Exactly.
Yeah, I don't see why not. I mean, I don't think that we would do it on our side, on the THORChain side, but I think Maya could do it on their side. I don't see why they couldn't do it. They just have to lock up some synthetics into their Thor address on their network and do churning and all that kind of stuff. I don't see why not.
Cool. I will talk to them.
Yeah.
Thank you.
Yep. No worries.
Cool, guys. Any last stuff you want to talk about? Or anyone else that want to come up?
Not for
That's
me.
it for me.
All right, let's ship it. See you next week.
Sounds good.
All right,
See you
guys.
guys.
Chat later.